Welcome, Fairfield Public Library patrons. This presentation is a discussion about the Weiss Financial Ratings Database, which is a tool that is available to you through the Fairfield Public Library website. You can log into the FPL website and connect to all of these tools, or you can log in from home with your library card. Here's what we'll discuss. We'll discuss the investment ratings of stocks, mutual funds, and exchange traded funds, plus financial strength ratings of banks, credit unions, and insurance companies, the Medicare Supplement Insurance Pricing Guide and Planner, and our series of financial literacy tools. And remember, all of these tools are available to you through the Fairfield Public Library website. Now, just some background. This database is brought to you by Grey House Publishing, who is a reference publisher and online database provider, and Weiss Ratings. Now, Weiss Ratings has been rating the investment performance of stocks, mutual funds, and exchange traded funds, plus the financial strength of the banking and insurance industry for nearly 50 years now. And what our mission is to provide the consumer and the library patron with independent, accurate, and unbiased tools that they can use to empower themselves to make the most informed financial decisions. So that's what we're going to go through today, these tools that are available to you as a Fairfield Public Library patron. So let's jump right in. I'm going to start with the financial literacy tools, which is available through this blue tab at the top called Financial Literacy Tools. And let's start with financial literacy basics. So if you're interested in kind of the nuts and bolts of finances, each one of these easy to use guidebooks can be downloaded to your computer or viewed on your computer screen in an easy to use PDF file. And that means that you can kind of explore each topic individually. And what these tools are designed to do is to help you both navigate the topic, but also give you information about some of the questions that you might not have thought to ask yourself before doing this exploration. So the tools that are available here will help you how to manage debt, how to make and stick to a budget, what to know about buying a car and auto insurance, renting an apartment, calculating the cost of college, how to start a 401k, understanding health insurance plans, and what to know about checking accounts. And these guidebooks are full of worksheets and planners and easy to follow guidance to help you just better understand these financial areas. Now, for those who are kind of going to the next step of their financial literacy, we provide a tool called Planning for the Future. And these guidebooks will help you navigate living together, getting married, and starting a family, what to know about the finances for each of those phases. If you're buying a home for the first time and mortgage shopping, saving for your child's education, retirement planning strategies, insurance strategies, healthcare coverage choices, career advancement, and how to protect yourself from identity theft. And each one of these images will open a PDF to navigate that topic in full. And for those who are interested in investing and might be ready to invest in either the stock market or a mutual fund for the first time, we have a new tool called How to Become an Investor. And these guidebooks will walk you through kind of, just the basics of investing. What is investing? Brokerage firms, financial advisors, what type of investor are you and risk tolerance? All about investment fees, tax consequences, and alternative investments. And for those who are looking to explore insurance-related topics, we offer these consumer guides, which walk a user through a number of different insurance-related topics, like homeowners insurance, auto, variable annuities, term life insurance, health savings accounts, long-term care insurance, Medicare supplement insurance, prescription drug coverage, and elder care choices. So for those who want to, really get started, I recommend starting with these financial literacy tools and kind of, getting the lay of the land with those guidebooks. Now I'm going to jump into the individual data sections of this database. And let's go ahead and start with stocks. Now, Weiss Ratings rates the investment performance of over 11,000 stocks that are traded in the US. Now, there are three main ways that you can search through this wealth of information. Now, if you know which stock you're looking for, you can enter a company name or a ticker symbol in the nav bar at the top of the database and then access information that way. But if you're not sure what you're looking for, you can start a quick search, which is a guided search. You can build a screener, which is our most powerful way to search the database. Or you can access these silos of stocks by clicking on one of these towers, and that'll actually start a screener. So I'm going to go ahead and click on this buy tower, which is going to start a screener of the 1,200 plus stocks that are rated as a buy. Now, the ratings that you're going to see here follow a pretty standard report card style grading mechanism. So A+ is excellent, B is good, the C range is average or fair, D is weak, and E is very weak. So, follows the standard report card style with, pluses and minuses in there as well. So this screener has already pre-populated with a slider from A+ to B-, and that makes our grade for a stock that is a buy. The C range is recommended hold, and the D and E range are recommended sell. Now, I want to go ahead and add a few more criteria to this search to kind of narrow down the search results in this screen based on what I'm looking for. So I like to add a criteria for industry. And let's go ahead and, just for fun, take a look at pharma. And then I'm going to add an additional criteria for total return. Now, there's a bunch of different time periods that you can search for, from the last 2 days up to 5 years. Now, Weiss's ratings are very conservative. So we are looking at the long-term performance of these investments. So we're not looking at what they did in the last day or what they did in the last month or quarter. We're looking at what they did over a long period of time to make a conservative, risk-adjusted assessment of how that investment will perform in the future. So I'm going to go ahead and choose a 5-year total return. Now, each criteria that I've selected can be sorted in this table. So if you wanted to sort the investments here by rating, you can sort this by ascending or descending. And you can see that this Thermo Fisher Scientific stock has the highest rating of A. You can also sort by this 5-year total return. And you can see that this Repligen Corporation has the highest. It's a B- rated stock right now, but it has a 733 plus 5-year total return. Now let's go ahead and take a look at this particular investment. Now this screen is asking me, do I want to leave? And that's an important reminder, because as a user of this database through the library, you have a tool available to you called a watch list. And that allows you to save both screeners that you've built to your personal account. It also allows you to add investments or companies to a watch list. And a watch list is a way for you to create a short list of companies or investments that you want to keep an eye on. It also makes it easy every time you log back in to take a look at those that you've stored in your watch list. And what makes it so easy is that we will give you email alerts if something in your watch list is upgraded or downgraded. And that happens in real time so that you can find out, if we have upgraded a stock or a company, or if it's been downgraded, you can get that alert and then, make whatever action is necessary. So I'm going to go ahead and leave because I'm not going to save this particular screener. So let's take a look at this Repligen Corporation stock. Now, this is a B minus. Now, this is actually in my watch list because this watch list button has a checkoff box in it. If something is not in your watch list, it's going to look like this star flag. So you can just click on that and it's super easy to add something to your watch list. Now, in addition to the overall rating that you see here, there is additional ratings for reward and risk. And, for the beginning investor who, may not be ready to make an investment, or maybe they're in the research phase and taking a look at, well, which investments make the most sense for me. What this database is designed to do is to break down all of the information so that it's easy to understand. And that's why we break the rating down to reward and risk. So the reward is looking at, well, how is it paying out? And this is rated as an A for excellent because, that $733 5-year total return, that's awesome. But the risk rating is a D plus, which is weak. And you can see here that, the price indicator has been volatile. It's gone up, it's gone down. So we deem that a riskier investment. So for someone who, might be risk averse or doesn't want to take on that much risk, this particular investment may not be the right fit for them because it's just too risky. They might want to consider a mutual fund that is more diversified and, carries less risk in terms of an investment. But, for those who, are looking to, get a big payout and, take on a little more risk, this might be something that they want to consider. So the information that you see here, you have all of their total returns, their income information, a description. You can look at key statistics if you want to dig deeper into the numbers. There's a ratings history so that you can see how this investment has been rated over time. And, speaking to the volatility of this particular investment, you can see that it's really flip-flopping between, the C range, which are these yellows, and then the B range, again, speaking to, the volatility of this particular investment. There's a technical chart for those who like to, absorb their data in chart form. There's a price history, so you can see their pricing over time. Now, you can also use a comparison tool, which I find super handy because it allows you to stack up different investments side by side. So if you wanted to compare this investment to, something else like Apple in a different, industry sector, this allows you to just line the numbers up so that it makes it easy to compare them side by side. And you can load this up with up to 4 different investments in this comparison tool. Now there's a sector comparison and an industry comparison, which allows you to see how this particular investment is performing against the industry average. And then you can dig deeper if you want to into an income statement, the balance sheet, cash flow. Now, if there are terms in these profiles that you are not sure of what they mean, you can use the glossary, which changes based on which segment of the database you're in a given moment. And that allows you to kind of, just expand your vocabulary of what these terms mean and kind of better understand how they work in terms of investment analysis. So that is how to screen for stocks. I'm going to hop over to mutual funds next. Now, as compared to stocks, which is an investment in one singular company, and those investments carry some risk because all of your eggs are in one basket. One basket is that company, and if that company makes a wrong turn and has some poor decisions, that may cause that particular investment to drop in value. Now, with mutual funds on the other side, mutual funds are a basket of different investments. So they're diversified. And that also decreases the risk with a particular mutual fund because, you're not only relying on one company to perform well, you're relying on that fund manager to invest in solid companies. So if one particular investment has a fall, it doesn't impact the entire mutual fund as much as it would be if you had a stock in that one company. And that really speaks to the ratings distribution of mutual funds, which is almost 100% different from the stocks, where right now there are 16,000 mutual funds that make our buy rating of A+ to B-. There are just under 8,000 that are listed as a hold, which means, for us, if you have it in your portfolio, hang on to it, but maybe not necessarily add more right now. And then there are only 714 that are listed as a sell. So I'm going to go ahead and build a screener for mutual funds. And now I started this screener fresh, so I want to go ahead and add a criteria. And I always like to start with rating so that you can move this slider over to A+ to B-. You can add a criteria for total assets, which allows you to search for larger or smaller funds. Let's add a criteria for total return. And again, I like to use 5 years to look at the long-term performance of this investment. Now with mutual funds, I like to add something called minimum initial investment. And that is the dollar value of what you have to put into the fund first in order to invest. And you can see here from this ratio that some funds don't require any minimum initial investment, so those are 0. But there are some funds that require an initial investment of up to $5 billion, which I don't know about you out there, but that's a little rich for my blood. So I'm going to go ahead and change this 5 billion to 1,000. And that will refresh the table that you see down here. So out of the 16,000 some odd mutual funds that have a buy rating with us, there are about 9,700 that have a minimum initial investment of $1,000 or less. Now let's go ahead and sort this by total assets. And I want to go ahead and sort this descending so I can see, well, who's the biggest fund? And that's this Fidelity 500 index fund. So if we go ahead and hop into this information, you can see that it is a B or a buy. Its reward rating is a B+, which is good. Its risk rating is a B-, which is also good. You can see their performance over time. It's a pretty steady uphill climb. They are a large blend fund. Subcategory is US equity large cap. And then you can look at their total return over time, their company information, investment strategy. What I also like to look at is top holdings. So these are the investments that make up the fund. And you can see here that Apple, which is a B-rated investment, according to our model, makes up 6.07% of this fund. Microsoft, which has an A- rating, a little bit higher, is 5.79. Now, if you scroll down here, you can see that, some of the larger investments in this fund, have a pretty solid rating with us. There's only 3 that are in the C plus to C minus range, and I don't see any in the red zone of D plus or less. So, this looks pretty good. You can use the similar funds tab to look at funds in a similar space. You can look at their net asset value history over time if you want to go ahead and dig deeper into their history. You can use the comparison tool, of course, to compare individual funds side by side. And then again, if there are terms in in any of these reports that you're not sure of, you can use the glossary to learn about what those individual terms mean. Now, I'm going to skip over exchange traded funds because they search very similarly to mutual funds, but I just want to call out the ratings distribution of these ETFs. We rate about 2,200, 2,300 individual ETFs. Only 595 make our grade for a buy rating. 1,400 are right now a hold, and 317 are a sell. And you can search through these ETFs using a screener with a quick search, or of course, if you know what you're looking for, you can type in the information top bar. Now, I'm going to go ahead and hop over to banks. Now that I'm on the right side of the database, the ratings mechanism changes somewhat. Now, we were looking at, for stocks, mutual funds, and exchange traded funds, we were looking at the investment performance. So how has that investment performed over a long period of time to then project how that will, perform in the future. Now, for the right side of the database, for banks, credit unions, and insurance companies, we're looking at the financial strength or financial safety of these companies. So we're digging deep into their quarterly financial and regulatory filings to project their financial capacity, whether or not they can withstand a minor recession or maybe a severe recession. Will they be able to withstand something in the marketplace, like a global pandemic maybe, that they hadn't planned for? So I think that speaks to kind of the importance of the financial strength of these types of companies. Like if you think back to the mortgage crisis of 2008, 2009, after that fall, over 300 banks failed during that time. Now, I'm sure you know that your money is insured and protected by the FDIC. So, your money will be safe even if your bank fails, but it could take 30, 60, even 90 days to get access to your funds if you have a bank failure. So what our mission is to do is to help you avoid the hassle of dealing with a failing bank, credit union, or insurance company. So we want to alert you to their financial position, before something goes wrong. Now, if we take a look at the ratings distribution for banks, you can see here that the distribution is, looks pretty good. The vast majority are in the, A range, B range, and some in the C range, and only a few in this D plus through E minus range. Now, if you want to go ahead and search for a bank, you can again, click on one of these towers, or you can build a screener, which I like to do. And I always like to start with rating. All right, so let's add another criteria for states with branches, because I want to find out, well, who's operating in Connecticut? And then let's add another criteria for total assets. So we can see, well, who are the largest banks? All right, now if I move my slider over to the A plus to B minus range, you can see that there are 31 banks who match this criteria with branches in Connecticut. Now, if I sort this, you can see here that Stafford Savings Banks has an A plus rating, which is fantastic. Let's take a look. Now, these are the criteria that is driving this A+ rating. And you can see here that it was recently upgraded. Their capitalization is excellent, asset quality is excellent, profitability, stability, excellent, liquidity, excellent. So it has to get an A+. It's excellent across the board. Now you can, read about some of the factors that, go into our rating. You can look at their asset quality, profitability, but most of our users are, interested in finding out what's the financial strength of my bank? Is it good? Is it bad? So you can use this to kind of inform your decision of, does banking with this particular institution make sense? Should I be concerned that it doesn't have as good of a financial position? So what we are trying to do is to give you solid information about the financial performance of your bank or your credit union, so that you know that you are banking with an institution that has the best possible financial stability. You can look at their ratings history over time. You can use that comparison tool to compare individual banks side by side, the industry comparison tool, of course, and the glossary if you want to learn about the what these indicators mean. Now I'm going to go ahead and hop over to insurance companies. And I was talking to a colleague not too long ago, and, especially in this time of COVID, people are thinking about insurance in a new way to say, well, do I have enough life insurance for my family? What about homeowners insurance? Do I have enough? Am I insured with a solid company? And again, what our goal is to provide consumers and library patrons with information to answer the question of, is this insurance company going to be there for me when I need them 20 years down the road? Now, take a term life insurance policy, for instance, which, you can pay into for 20 years. You want to be assured that that insurance company is going to be there for you 20 years down the road. If, heaven forbid, you do need to, use that life insurance policy. Same thing with a homeowner's insurance policy, which you might be paying for, 30 years, the life of your mortgage. So let's go ahead and build a screener for insurance. And I like to always start with ratings, of course. And I'm going to move my slider over A+ to B-. And I want to add a insurance type. It's not every insurance company offers every type of insurance. Let's take a look at homeowners insurance. Add a criteria for licensed in, because not every insurance company is licensed to do business in the state of Connecticut, insurance capital of the world, of course. So here we see that there are 139 insurers who are licensed to sell homeowners policies in the state of Connecticut. And USAA General Travelers Indemnity, those have the highest rated insurers in CT with a B+, which is a very good rating. We can hop into these individual ratings to see what's driving this. Their capitalization is excellent, reserve adequacy is good, profitability is excellent, liquidity is weak, 2.3, and stability is good. And you can read about all of this information in these ratings factors. But like I said, with banks, most of our users want to just know the question, is this insurance company, is it in a good financial position? Is it in a weaker financial position? So that's the information that we're trying to answer, or trying to give you to answer the question of, does this insurance company make sense for me and my family or my individual needs? Now, if we back up and take a look at that screener again, let's start over here. All right, so here's my insurance screener. Now, what happens if I move my slider over to D+ through E-? So there are 7 insurers who, really have a a lesser financial position who are still selling homeowners policies in Connecticut. So, these might be insurance companies that you might want to avoid. You might want to get quotes from some other policies to, make sure that you are using a company that, has the best possible financial position. Okay, now I'm going to go ahead and hop over to our Medigap tool. Now, like I said in the very beginning of this presentation, Gray House Publishing is a reference publisher. So we are not here to sell you insurance policies at all. What our mission is to do is to give you accurate, unbiased information to help you make informed decisions about your financial or insurance needs. So the information that if you're interested in getting a Medicare supplement insurance planner and pricing guide, we don't collect this information in any capacity. It's used to customize the first page of your report and the pricing that's applicable to you based on your age, your gender, and your zip code. Now, if you want to get a report, you can enter your name here. You can enter a nickname or your initials. Now, if you would like a copy of the report emailed to you, and some of them can be up to 80 pages in length, you can enter your email address here. And then you want to enter your age, your gender, and your zip code. So let's do 06824. Now this is going to swirl for a moment while it generates the report, and I'm going to pull up one that I generated a little while ago. Now, just to give you some background of this particular report, we have been both rating the financial strength of insurance companies for years and years. We've also been collecting the actual pricing that these insurance companies will charge for a particular Medicare supplement insurance plan. So between those two pieces, this report is designed to do a couple of things. So what we want to do first is to kind of give you a lay of the land of what do I need to be thinking about when I am navigating questions about Medicare and Medicare supplement insurance? Does it make sense to get supplemental insurance, based on your budget and your healthcare needs? Because of course, Medicare does not cover all of the costs for your healthcare after you turn 65. There are out-of-pocket costs and things that it doesn't cover. So for many people, Medicare supplement insurance makes sense because that will cover what Medicare doesn't. But, it's not right for every budget and, for every unique situation. So what this report is designed to do is to give you information about every Medicare supplement insurance plan that's available to you, what it covers, what it costs, so that you can then, find one that's right for you based on your budget and your healthcare needs. So let's take a look at the report itself. So the first section is a narrative about a couple of questions that we will help you answer. The first is, should I seek to get better health insurance coverage than Medicare alone can give me? Decision number 2 is, how should I cover that gap between my medical bills and what Medicare pays? Decision number 3 is, which Medigap plan should I choose? And decision number 4 is, which insurance company should I buy my Medigap plan from? And we talk about, how this report can help you make those decisions. So this next section is a long list of what Medicare covers, what Medicare pays, and what you pay out of pocket. Now, we've been talking to public library patrons across the country about this particular topic in doing in-person and Zoom meetings and talking to people about this particular tool. And it really has become apparent to me that people who are navigating the Medicare decision-making process, particularly for the first time as they're turning 65, have a lot of questions about, what is this all about? What does Medicare cover? What is it going to cost me? Am I going to, have to pay out of pocket? What's going on? And that is what this tool is designed to do, is to give you real easy to understand information about the choices that are available to you as you are turning 65 or as you're already on Medicare, and how to best cover your costs. And for many people, Medicare supplement insurance or Medigap plans really fits that bill. So you can use this table as an estimator of, based on your annual medical needs, what you would pay out of pocket for the services that you require, and find out well, what's the budget. So this section goes on for quite some time, talking about a whole bunch of different medical procedures, and then we talk about, well, what are the gaps in coverage, like deductibles and co-payments, shortfalls, and services that are not covered. And then we talk about, well, if Medicare supplement insurance is right for you, which Medigap plan should I choose? And this handy chart allows you to compare each of the 10 Medicare supplement insurance plans side by side. And Medicare can be a little bit like alphabet soup, because you have Medicare Part A, Medicare Part B, Part D, prescription drug coverage, and all these Medigap plans A through N. So alphabet soup. So this handy chart allows you to find out what these individual Medicare supplement insurance plans actually cover. So here you can see that the Medigap Plan A, it covers your Medicare Part A coinsurance and hospital costs, your Part B coinsurance or copayment, first 3 pints of blood, and your Part A hospice care coinsurance. Now, Plans B, that adds your Part A deductible. That's about $1,400 per year. Now, Plan C, that adds skilled nursing facility care coinsurance and your Part B deductible, which is $203 per year. And then we have Plan D, Plan F, Plan G, K through M. Now, Plans F and G are the most popular because they're the most comprehensive. And I just want to call out one difference between F and G. So they both cover your Part A coinsurance. They both cover your Part B coinsurance, first 3 pints of blood, your Part A hospice care, skilled nursing facility care, your Part A deductible, and your Part B excess charges. But the only difference between F and G is that Plan F, the insurance company pays your Part B deductible, that's $203 per year. They pay it for you on your behalf. And with Plan G, you pay that $203 deductible out of pocket. Now, keep in mind that these plans are regulated by the government. So every single insurance company that offers each of these lettered plans provides the same benefits. There's no like Cadillacs and hatchbacks here. Every Plan A is exactly the same. It covers these 4 benefits. Every Plan F is exactly the same. It covers everything that you see checked off here. All Plan Gs are the same. They cover everything that is checked off here. Now, the benefits are regulated by the government. What is not regulated is how much these insurance companies can charge you for the same benefits. And, as you'll see as we move through this report, it really does pay to shop around, because, you're not going to get extra benefits in one Plan G versus another Plan G. The benefits are regulated. What you will be able to do is potentially save some money just by shopping around. So let's take a look at the individual plans. Now, each plan has its own chapter, and you'll see a narrative here of what that plan covers, and then a handy chart of the insurance companies that will cover you based on your age, your gender, and your zip code, and what they'll actually charge. So you can see here that for Plan A, you could pay $26.63 with United American, or holy cow, you could pay $11,000 for Anthem. And these plans are both the same. They're both going to cover those same 4 items that we were looking at in that handy chart. Now, United Healthcare at $22.11, that looks to me to be the best deal for Plan A. Now, this double asterisk means that this is an AARP plan. So if you get a mailer or see a commercial for Medicare supplement insurance through AARP, they underwrite all of their Medigap plans through United Healthcare. So that's actually who's going to cover you. And this particular in this particular case, this 2211 looks to be the best rate. This Colonial Penn down here at the bottom looks to be the worst rate at $16,000. So if you were interested in Plan A, you can see what everyone will charge and, hopefully get the best rate. Now let's pop over to Plan G. Now you can see here that there's a narrative of what these plans cover. And then take a look at the pricing. Now, remember, Plan A only covers 4 different benefits. And that would cost this same person that $22.11. Now, if you compare these prices, you could pay just a couple $100 more per year and get the most comprehensive plan available. Now, remember, this is Plan G, where you pay that $203 deductible out of pocket. Let's hop over to Plan F. Now, Plans G and Plans F are the same, except for that $203 deductible. But lo and behold, the prices for this Plan F are way higher than Plan G, certainly more than $203 difference. United Healthcare will charge you $32.52 for Plan F, but they'll charge you $24.96 for Plan G. And the only difference between those two is that $203 deductible. And there's another big difference between Plan F and Plans G. If you are eligible for Medicare after January 1st, 2020, Plans F and Plan C are no longer available to you. If you turned 65 prior to January 1st, 2020, Plans F and Plan C you can still participate in, but it pays to shop because, if you had Plan F and you are paying $3,200 per year, you could save yourself a bunch of money by switching to Plan G, paying $24.96 per year, and knowing that you have to pay that $203 deductible, which is an annual payment, out of pocket. So what this report is designed to do is to give you answers to basic questions about Medicare supplement insurance. Is it right for you? Which plan is right for you? Compare the plans side by side. And then most importantly, get a list of every single insurer that will cover you and find out what they will actually charge so that you can make sure that you're getting the best plan for your unique healthcare needs and for the least amount of money. Now, if you want to find out, well, how do I contact these companies? There's a handy appendix at the back, so you can find the phone number for each of the insurance companies that are listed in the report to, get your questions answered. And so let's go ahead and hop back over to the platform. And I just want to call out how to find our database from the Fairfield Public Library website. So once you hop on to their website, you're going to click on Learning and Research, which is in this gray bar, and then click Full List. And that's a list of all the databases that Fairfield Public Library subscribes to. And if you scroll down to consumer information, you can click on Weiss Financial Ratings. That will get you to the whole platform, or Weiss Medicare Supplement Insurance Pricing Tool, which will hop you over to the Medigap plan. So you can run a Medicare Supplement Insurance Pricing Tool just for you. So again, that's learning and research, then full list. Scroll on down to consumer information, and here are the 2 links to get you access to the database, which will give you, again, information on the investment performance of stocks, mutual funds, and exchange traded funds, the financial strength of banks, credit unions, and insurance companies, our Medicare Supplement Insurance Planner and Pricing Guide, the financial literacy tools that you can use to build your knowledge base, and of course, the watch list to keep track of investments or companies that you would like to keep an eye on. So thank you so much for joining us today for this presentation. I hope it has been helpful, and I wish you a bunch of fun scrolling through and accessing the tools available to you within the database. Thanks so much.